Good morning, everybody. Cowboy here. Looks like I forgot to do our usual entry, our countdown, but that's just fine. It is now 6:30, actually 6:28 a.m. EST. A little bit early. We started a couple minutes early today because the CPI comes out. All right. So good morning, Papa Giorgio. Good to have you on. CPI data can really move markets. It can move them a lot. And we're looking at the CPI right now. So what I'm going to do is I'm going to zoom in. I'm just going to zoom right on in to a lower time frame. And as the data comes out, we'll see how the market behaves. What is this, the 1 minute time frame? 5 minute. 5 minutes good. Let's go to the 1 minute. It's more fun. Got a couple minutes yet. So CPI, that is a measure of inflation. And so the reason that the CPI is, very, very watched and people pay close attention to it and all of that is because interest rates power the market. Okay. So when money is cheap, people borrow money and it goes into the market. And as a matter of fact, all money is debt. So when money is cheap, there's just more money around. And when money is expensive, then there is not. So if the CPI, the inflation rate, is higher than expected, then interest rates would remain high, less money would be expected to stay in the market, people will pull their money out of the market, prices will go down. If the interest rates are lower than expected, then holding rates higher has worked and they might expect cuts. Now what we're seeing already is price kind of moving up a little bit. Now the expectation of cuts means more money, means prices go up, right? So it's not about, it's all about the expectation, right? So the clock is ticked over. Price is initially moving down. It does not mean that we're seeing people pulling money out of the market, more expensive, holding rates higher. So that doesn't mean the inflation rate has been higher than expected, but usually that's what that means. A lot of times money or the price of things will just kind of shoot down really quick and then shoot up because it wants to knock people out of their trades, right? That's the tricky part about trading news, is that the market makers will use it as a reason to knock people out of their trades. But seeing as how tame this is, I'm willing to bet that the data came out as expected. So let's flash over to forexfactory.com, refresh it, and we'll go back to Wednesday. CPI as expected. I was correct. So all the data is exactly as expected as far as CPI is concerned. All right. So I know my head there is in the way of some of that data, but no surprises. The estimates were all correct. So going to be a calm day with that, with regard to that sort of thing, right? Probably not going to see a whole bunch of action. And as it stands, I'll be able to just kind of go through my regular predictions as if it were a regular Wednesday, because it pretty much is. Okay, well, let me flash back to that chart, that chart page, and let's go ahead and assess what I think is going to happen. I'm just taking a look at this zoomed out, crazy looking screen for a moment. I'll zoom in and it will make more sense to you very shortly. Just be a little bit patient while I scour the data. It's the weekly chart. Just going to take a quick look at the monthly. Okay, so what I expect is price to kind of just be sideways right now. It may try to reclaim the highs. So this is the NASDAQ, right? This is all the tech stocks, basically. Measure of how well the tech stocks are doing. And what I think will happen is probably a range will develop below the highs. It could break the highs. I doubt that it will. So the high happened back here in June, right? What is this? The daily chart. So this is the 16th of June. The NASDAQ met 31,000 or so points, and then it retraced, and it almost made it to the October highs. It didn't, but it almost did. And then it got held up. I think a lot of this holdup was people blamed it, the fact that price rose so quickly. People said it was because of Iran news. In my opinion, it was more because of our new policy with Japan, where we are going to support the Japanese yen and therefore support equity markets around the world. So I think that might be a reason why this headed up, and plus just technical reason. We have retail traders are like dip buyers. It's just how it is. And if you look back through history, the last time we saw a top, which was around 2025, this was in December 24, and then an attempt to reclaim in 25. Price then broke that. And then we had in October of 25 and January of 26, we started to see a retracement. And the same thing happened where price didn't quite make it to those highs. They didn't make it to the prior high. Price kind of made its way down and moved before it got there. So all the people who were waiting for price to gather liquidity there, they all got kind of stuck where they're like, oh, shoot. And price started to go up without them. And we're seeing the same thing happen again, right? And this is pretty typical. Everybody's waiting for price to go to some points, and the market makers just get in before they can, right? And they know exactly where everybody is behaving and where their buy market, their buy orders are, their limit orders. They can view when everybody's starting to buy, so they know when to do what, right? So you have this prior high. It's kind of a double top. And then price tried to make it to that high, didn't quite do it, and shot up from there. But does that mean that we're going to see price make a new high? Maybe eventually. This would be the typical pattern, but we have been seeing price going up for a very long time. And as a matter of fact, this move in the NASDAQ, as I've talked about many times, this one from here to here is faster, stronger, and farther in a very short period of time than is supposed to happen. It had about a 0.2% chance of happening. It's not a 2% chance of happening. This was a sigma 3.8 or so event. Very unlikely for price to go like this. This looks like a distribution to me. So that said, it might be that price either just goes sideways for a while, such as maybe something like this. Maybe it tries to reclaim the high and then, go sideways. We don't really know what's going to happen until it does, of course. That's just how things are in the world of trading. But to look at the metrics in the high time frame, they're starting to just kind of even out. And we have the election coming, the midterms, which is what this dotted line is right there. And I do believe that everything will be done to hold prices up until then, right? Because the current administration wants their people to be elected. And if the markets go down, that's less likely to happen. So I think they will just kind of do everything they can to keep markets from going too far down. They may not have the power to push it much higher. That could be very expensive, but they'll do everything to keep it from going down that they can. And the Fed will keep things from falling until it cannot, right? That's how that works. So, we do have some statements from Kevin Warsh that make us think, okay, maybe they will let it fall, but it's just impossible to know. So I'm not worried about what happens so much in that many months. I'm worried about what happens like today. So let's go ahead and zoom in on that. Okay, so let me come to some of this data here. Excuse the crazy screen. For now, price is rather bullish, so it's going to want to head up, but at some point this move up will take a break, right? So as it stands right now, this CPI, looks like I had it. Did I have it at the wrong time? No, it's at the right time. This CPI data, maybe it's because it thinks I'm in the wrong. Yeah, we got to fix that. Okay, apologies, everybody. Got to get things straight on the chart. I know I'm very particular about my chart, very precise. So for now, I think you'll see another attempt to reclaim this local high. Okay, so this local high on the NASDAQ, which is right here, happened 5th of August. The level is 30,090. That local high may end up being, there might be an attempted reclaim. It may not make it up there, which might make for a nice short, as I marked out right here. Now, we do have the PPI tomorrow. So the PPI is, something that people often forget about, but it's at the same time tomorrow as the CPI was today. Okay. So we'll put it right here. And the PPI is another inflation metric. It is the producer side of things, right? So it's producer inflation. It's materials for manufacturers and, restaurant owners, the food they buy, and so on and so forth. I believe cost of employee also fits in there. I'm not exactly sure. But in general, that's what that is. And so I actually did a study. I took several years of data, and I preferred recent data because I wanted recent data. I like to weight what has happened in the last 5 years rather than what's happened in the last 25. And I tried to establish a relationship between CPI and PPI to see if one is predictive of the other, meaning, okay, if CPI is a hot print, will PPI be a hot print? And there literally was no correlation. And I find that to be no accident. I think they don't want the market being able to do what I did and to predict what might happen. So, there was no correlation between the two, right? Not that I was able to determine. Perhaps I did it wrong. But we didn't have a hot or cool print today. We just had an even print. So price is going to continue to do what it was going to do anyway. So to look at that, I do expect in the next day or so, price probably to grind up and test that level that we just talked about. So something maybe like this. And I'll leave this old prediction up there. Every one of my predictions this week was like, I don't know, it's kind of weird. I don't know what's going to happen. So I just figured it would like range this week because there's just not a lot of volatility in the market usually this month. The NASDAQ has shown plenty of tradable volatility, but really backing out and looking at widespread volatility, it's pretty quiet in August. People are on vacation, so on and so forth. I did expect price to range between these levels. So this 30,090 that I talk about and this lower level at 29,229. I didn't expect price to break out of either one of these, although it could. Once price gets up to this level, I will take a look to see, okay, do I want to look at longs for a breakout or do I want to look at shorts? Now, if price does break out from that, then we're looking at, some levels as to whether or not it wants to try to reclaim this high. At the moment, I don't know that it has the juice for that, but not a concern for this week. I don't think, unless we have some crazy event like, there's peace in the Middle East and Israel, shakes hands with Iran and Netanyahu's children marry the, Ayatollah's children. And all of a sudden, everything will be a utopia and, none of that's going to happen. So this is just what I expect for this week on the NASDAQ. All right, good. Quick look. Let's take a look at silver and gold. I expected a move up we are getting. Not as quick of a move up as I thought, but a move up nonetheless. And again, we have PPI tomorrow, which can affect things, but it seems that it's just going to be a calm print. So I do think that looking for a long is wise. One could look for a short at this level. This is just what we talked about yesterday. One could look for a short at the 67.18 level, but I do expect it eventually to break out, whether it's this week or next. So that's what I expect with silver. We are now past the moment where I'm going to go ahead and move us over to the private live lab. So do me a favor, look in the description. There is a free algo. Click on the link. It'll take you to a video where I build an algo before your very eyes. You do need to optimize the algo first before you use it. So come over to algofactory.tech and we'll show you how to do that. But this algo, it's a simple algo. I show you how it's done. I also show you the tools the traders use to connect that algo to their computer so they can trade while they might be golfing or sleeping or whatever it might be. The computer trades for them. But again, you do have to optimize that. So algofactory.tech will do a couple of things. One, we will teach you how to optimize that algo or any other algo you should build. And two, we will teach you how to trade like a hedge fund pro. So go ahead and do that. We'll be back tomorrow, 8:30 a.m. EST, and we'll take a look at the PPI data as it comes out. And I will probably start a little bit early as I did today. And we're going to go to the private live lab. So thanks for watching, and don't forget.
Join us or die.
Just kidding. You're not going to die. We love you.